Let's talk about SIFs, the new investment option in town. If you have been investing for a while, you have probably heard about mutual funds, the go-to option for most retail investors, and maybe even about PMS, the portfolio management services, where high net worth individuals invest 50 lakh rupees or more for a custom-built portfolio. But now there's something new and interesting in between these two categories, and that's specialized investment funds or SIFs. This is a brand new category that SEBI has just approved, and it's designed for investors who want more flexibility and sharper investment strategies, but without needing to lock up 50 lakh rupees like PMS. To invest in this specialized investment fund, you'd need a minimum of 10 lakh rupees, so it's definitely not for first timers, but it's far more accessible than PMS. Now let's talk about how this fits into your investment toolkit. Mutual funds are obviously your starter pack. You can start with as little as 500 rupees. The strategies are basic, mostly long-term buy and hold, and they're designed to be simple and transparent. PMS on the other side is your high-end tailor-made option. You need at least 50 lakh rupees. The portfolio is customized for you, and the fund manager has a lot of flexibility to choose what to buy, sell and when. Now SIF sits right in the middle of these two, 10 lakh rupees minimum, advanced strategies like long-short trades and derivatives, but still regulated closely by SEBI, so there's proper oversight. Now what makes SIFs different from regular mutual fund? For one, the strategies. Regular mutual funds mostly follow long-only strategies. They buy assets they expect to go up over time, but SIFs on the other hand can go both long and short, meaning they can bet on stocks and bonds and even on sectors that they think will rise or even fall. They can also use derivatives up to 25% of the portfolio, which lets them hedge risks or make more tactical bets. Flexibility you don't get with traditional mutual funds. And SIFs themselves can be either open-ended, meaning you can enter and exit anytime, or close-ended, meaning there's a fixed tenure. But even for closed-ended SIFs, SEBI says that they must be listed on stock exchanges, so investors have a chance to exit early if needed. Now, SEBI hasn't just opened the gates and said launch what you want. There has been a clear rule set for AMCs who want to offer these funds. Only AMCs with at least 5 years of track record are eligible to launch SIFs, plus they need to manage at least 5,000 crore rupees in existing mutual fund assets to even qualify. This ensures that only experienced players with rock-solid management systems get to handle these advanced funds, because these aren't plain vanilla products meant for casual investors. So who should even look at SIFs? If you're already comfortable with the markets, maybe you've been investing for a few years now, you understand terms like hedging, short selling and global macro strategies, and you want to go beyond mutual funds but without committing 50 lakh rupees to a PMS, this could be worth exploring. But remember, flexibility comes with higher risk. These are not simple set and forget products like mutual funds. They're designed for investors who actively want to participate in more complex strategies and who understand the risk involved. This is a new space, so keep an eye out for which fund houses launch the first SIF and what kind of themes and strategies they bring in.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.